Good morning, friends. Welcome to my channel Stock Index Edge. I'm Nalinaksha Swami here. So, in my previous video, I discussed how you can trade intraday is made easy by quarterly theory. Quarterly theory, I had shown you which indicator you can use, and market undergoes through accumulation, manipulation, and then expansion and reversal. So I had explained that. Today's usually in our market session closes near the reversal session. This is the reversal part when yesterday it closed. So today, day before yesterday, it was the close of the reversal session, continuation of the expansion. So expansion, this is the reversal, continuation to the next day. And this is the first reversal quarter. Four quarters will be there. This runs from morning 9:15 to 10:30. So you need to divide this into four sessions. 1, 2, no, it's not 4. It's not coming 4 because fib is not working. There is a difference in that. So anyway, what you have to see, it made an high in the first 9:35 itself. It made an high, and you can see, closely observe the price action over here. It made an high higher than this. See, high of 19,874.3 and 19,875.15. That is the higher than this level could not sustain. This is the first candle, red candle, could not go past. It may fail to make a higher high. So that is an indication of the reversal, but not the confirmation of the trade. And when it started from here, and this big candle made a low, higher high and higher low. So what you have to do is, you mark this high and mark this low. It is showing market structure shift. There is a shift because it is making a, this is the first low. This is the first low made over there. Low is 19,827.9 and this low is 19,825.2. This matters actually. So this is the first low and it is lower than the first low. So then our dealing range, this range has been confirmed. This is the highest high and lowest low in this time frame. Then you need to wait for the market to go and see the failure of the rejection. Failure means rejection of this level because it has failed to go past this level. So we need to wait for that. You can see this big candle going up to high of 19,871.95, whereas the high is 19,875. So immediately it got rejected and it has been closed over here. So that is an indication that market is not going to go up, and this market shift has been confirmed, and you can easily take the trade in this time frame. You can go for the put option. So you would have what I observed on the live market is 19,900 and put option went up to 85. First, it made the low of, when it went there, it made a low of 89 and it made a another low of 85. Even though that is, this is not crossing the low, but the time factor, because of the time factor, it went to the 85. And if you would have taken in this time frame, this is the, you can see continuously going down, and it ended in the manipulation time frame. Manipulation time frame is 10:30 to 11:30, 10:30 to 12. It runs, so there will not be actually much action in the accumulation phase. This is the accumulation phase. Okay, so you could have that 19,900 put option started from 85 and it gave you 130 rupees, because this is the continuation. This is BTST trade. Only you should have guts to hold the call option or anything put option overnight. If you are nowadays, it is difficult to hold the. So in this way, you can make money, but the call writers or the put writers make more money. But how you can increase your profit? Suppose you need for writing the call option 1,10,000 rupees for that, for a 1 lot. So you will be making on an average for this from 85 to 130, you would have made 5,250 for writing. And if you would have bought the call option with the minimum investment of 85, 4,500, you could have made 4,000. And you could, if you are sure, if you start reading the market phases, intraday market phases, accumulation, distribution, accumulation, manipulation, and the distribution. These are the three phases alternate together. And if you manage to identify within the intraday time frame four phases, then you can also make money in the market. After that, later that, see, the market, yesterday was an expiry day, market went through consolidation phase. Even the manipulation was to the upside. Here it was an opportunity in the manipulation phase for the call option. Actually, call option also went down to 95 and then it went up to 130. So call option 19,700 call option went up to like that. Later, both of them went sideways and finally put option ended at the low. We have to see today it is the reversal. Daily it is ending at the reversal phase. Probably since there is a rejection, higher rejection, there are stop losses here. Probably price may gap up to this level, 853. We have to see this level. This level is very important because from here, this high price has been rejected. There may be some BTST call option trigger up to the 19,850, and later we have to see the price action, whether the accumulation phase or the reversal will continue to the upside or it will turn down. But actually, when you see, this is the dealing range between from the previous period, November, Wednesday 22 to this was the range. Now, for the new contract, new call option weekly, this one, the range has to be defined. Today is the day you need to mark out the things. That's how you can make money. These are I have also indicated quarterly, this you can apply quarterly cycles. I had shown you, again I'm going to show it to you in the indicator. If you type quarterly cycles by days theory, this is inner circle traders theories. Actually they have developed because market usually undergoes through 4 phases. That is accumulation, manipulation. After the manipulation, there will be expansion or the distribution phase. So you need to enter into the expansion phase or the manipulation. You have to see. Actually, market usually manipulates in the opposite direction. If there is you can see over here, manipulation has taken place on the opposite side. and that is on the 22nd. You can see how the market rallied. The intention was to go up. Here it consolidated. After going up, it has come down, it has consolidated. We have to see what is the intention of the market. If the intention of the market is to go up, it will come down, seek the liquidity down, and then it will start moving higher. So you need to wait and watch for the today's session. This you can apply quarterly cycles so that you will come to know, or otherwise you can mark the time frames. Reversal phase in the first 10 reversal. That is an expansion continuing to reversal. Reversal may be either to the downside or to the upside. And then it continues to the, after the reversal, from 10 to 12, 10:30 to 12, it is an accumulation phase. And then 12 to 1:30, it is a manipulation phase. These are the times actually. You should note what happens in that time phase. What is happening? You have to concentrate on the price action on the time period, and then you can take the trade. Here, when I go back here, you can see there was a very good trade for the call option buyers. Buyers of the call option or the put options. See, in the accumulation phase itself, market started going down. It ended at the lowest point of the lower than the reversal phase, and manipulation took place to the downside. Then if you would have dared it, then there was a time frame. Actually, time was there around 12:25. It made a low, and then it started moving up. This was an expansion phase. There was a time for the expansion phase. Here, actually, market consolidated in a range. It didn't go anywhere. So because it was an expiry, because premium, both the call and it was a day of writer's day, both the call and put premiums were decayed to nil. That's what happened on the Thursday. Thursday, before Thursday, you can see last week's Thursday, here there was an expansion and there was a sudden collapse around 3 p.m. Reversal was so sharp. You can see reversal was so sharp to the downside, and this continued actually. You can see the price action reversal was down, and the next day reversal could not go past that. This was a seller's area. So it continued to move down. And so if you notice all the cycles properly and the price action, if you give importance to the price action is very important. You need to read in that time frame what is happening. Then you can take a proper trade. You can become profitable. You should not trade whenever you want by seeing the red candles or anything. So you should have what is the time? I mean, what is the phase in the day market is undergoing through? Better not to trade in this time period, 10:30 to 12. You have to wait and watch what is happening on the time frame accumulation phase, whether it is going to go down or staying in a range. If it is staying in a range, you have to be careful. Thank you very much, friends. Nalnakshi Swami signing off.